Hello there, it's Jessica, and it is Thursday, which means it's time to talk about crypto taxes again because that's my only thing I talk about. Unless you know me really well, and then you know I can talk about lots of other things like music or alternative health or homeschooling or all kinds of things that I have had interest in over the years and had great opinions about, but that's neither here nor there. I am here today to talk about crypto taxes because I love being able to help people figure out how to optimize their crypto taxes so that they're not paying too much and so they can take advantage of their losses and they can do all this sort of thing. I think on Tuesday I talked about why you want to use a software to do your crypto taxes, that it does make it so much easier. All you do is you connect your APIs and then it imports the data automatically. And actually, I was just trying to connect a new account to my tax software. And oh my goodness, every so often you run into trouble. And having someone to ask when something is not going right is a really great thing. I do not have someone to ask. I need to figure out why it's not working and it's kind of annoying me. And I was almost late today because I want the API to work and import my new data of my new exchange I opened and it's not cooperating. So yay! But I will figure it out, and then I will be able to tell you if you have the same problem with your exchange, why you're having trouble with that exchange. And that has been most of the day, actually, is helping a few clients who are trying to wrap up their taxes before the USA tax extension deadline, which is next week. So I am helping a couple of people, and you open up their Binance US account and you say, it's really weird. There's like money coming in and money going out in a different format, but there's no trade. I think we need to import a CSV or at least look at a CSV and find the missing trades. And then you look at another account and you say, oh, there was a KuCoin account that randomly in the middle of May started bot trading 2 coins. And yet this person was receiving Luna airdrops, which means they had Luna at the time of the crash, which was May of 2022. And yet, there were no transactions at all from any time before May of 2023. I mean, just suddenly, randomly, there's this thing. And it's like, okay, KuCoin. All right, I see you. Why is your API data not importing correctly? Why are we missing anything that happened before this guy got in the account? And in this particular case, I think they've been in since 2021, they tell me. And like, yeah, okay. Why? That's what I love figuring out because who else is going to figure it out? Using a software is great. It's even better when the software works without any trouble. But of course, technology, some of us actually have trouble with technology. It's like you go near technology and it breaks. So if you're one of those people, you can pay us to go near the technology for you and then it doesn't have to break. Yeah, it's all fun. So today I didn't want to talk about softwares and problems. I did actually think that we could talk instead about the second most important thing you need to think about. When you've got your data in and you've got all the reconciling done and it's all ready to go, there is one more step before you run your tax reports for US investors and for some other countries too. And that is choosing which tax method you're going to use for the taxes. So, what is a tax method? The tax method is the way that the tax software or your brokerage or whomever is going to be recording your cost basis as. So, for instance, in the United States, we have 3 potential tax methods that we can choose. And really, you hear about the first one first, which is first in, first out. What this means is the first Bitcoin that you ever bought is the cost basis that will be used first. So, let's say you bought Bitcoin for $1,000. When you sell 1 Bitcoin worth of Bitcoin, if you've chosen first in, first out as your method, that cost basis is going to be used. So if you sell it this year and Bitcoin say like around 30,000, that means that you have a $29,000 gain because you bought the Bitcoin for 1,000, you're selling the Bitcoin for 30,000. The difference is $29,000, and that can be a pretty big tax bill because you've got $29,000 worth of gains, and then depending which tax bracket you're in and all the complications, then you have to pay the taxes on that $29,000. So this is the preferred method for the IRS. They definitely prefer having you report first in, first out because they know so many times that investments go up over time. And your first transactions usually have the lowest cost basis, which usually means that you're going to report the most gains, and that means they get more money getting paid into your taxes. So they really do push the first in, first out. But they also say you can use specific identification. And one way you can use specific identification is you take out a piece of paper and you say, I bought this coin on this day, and I sold this Bitcoin on this day, and I'm specifically identifying that this is the cost basis I'm using. Now, most of us aren't going to do that. But one way the tax software can do that for you is that you can choose one of the other methods. Another method would be highest in, first out. So highest in, first out means, say you bought Bitcoin 5 different times. And one of the times was like at 1,000, and then there was 10,000, 15,000, 25,000, and maybe you bought one when it was 50,000, right? Highest in, first out means you're going to use the cost basis of the $50,000 one before you use the other ones. So what that means is if you're selling this year and Bitcoin's at 30,000, but you bought it at $50,000, that is going to be a $20,000 realized loss, which will reduce your taxes, because if you didn't make money, you don't have to pay taxes on it, and you can use those losses to offset some of your other gains in crypto, or if you have gains in the stock market and certain other gains you can offset as well. If you run out of gains to offset it, you can take $3,000 against your income and reduce your income by $3,000 every year until you run out of that loss rollover here in the United States. So that's how highest in, first out works. And a lot of people really prefer to do that because, I mean, there's good and bad, and you can play with the numbers, but definitely when you're doing it with your brokerage, or if you're doing it with stocks in a brokerage, for instance, you have a standing method, and either you picked it or they assigned it. If you want to use a different method, you need to tell them when the item is sold that you're going to use this different method, and then they'll keep track of it. They have their software somewhere that is going to print out a report at the end of the year that says, okay, here's what you bought the Tesla stock for, and here's what you sold it for. So the crypto tax software is working the same way, although at the moment, and technically, you know, I'm pretty sure the IRS is not crazy about this, but technically you can kind of decide after you see how you've done for the year. Technically, I believe the IRS would prefer for you to decide before the end of the year and not be playing games at the end of the year, but take that as you will. Not financial advice, do your own research, all that sort of thing. So there's first in, first out, and then there's highest in, first out. And then there's last in, first out, which means maybe you bought Bitcoin at 1,000, 5,000, 20,000, 60,000, 49,000, and then you sold the Bitcoin for 30,000. So the one that would be used was the last one you just bought, which was the 49,000. And then you would have a $19,000 loss instead of the 60,000, which would have been a $30,000 loss, right? So thinking about these sorts of things can really make sense, like especially depending how the year went. In years where the market is going up, you probably don't want to use first in, first out, because if the market's doing well, then your Bitcoin went way up that year, and if you sold it and you bought Bitcoin really low at the beginning of the year and now you've sold it pretty high, that's a pretty big gap. But if the crypto market is not doing well that year, that can be a great time to use the first in, first out method for your taxes, because you'll kind of get that cost basis moved on so that you can move on to other cost bases. So for instance, if the Bitcoin has gone from 1,000 to 70,000 and now suddenly, let's say it's at 10,000, if I sell that Bitcoin at 10,000 and I have to pay $9,000 capital gains, but I've used up that cost basis, which is great, because in the future, when you sell the Bitcoin and you sell it for 100,000, you are starting with a base of wherever you next bought it, instead of starting with a base of you only paid $1,000 and now you have $99,000 worth of gains. So planning ahead for these things, taking advantage of bear markets is a great time to think about these things and to really plan strategically. I mean, it's a lot to wrap your brain around, so I know. I'm sure 99% of the people in the world don't think about these things, but it can make a huge difference on your taxes. There was one client that we ran their taxes with the 3 different methods, and we said, okay, here's your options. And one was like, you know, $20,000 of gains, and one was like $50,000 of losses, and one was like in the middle. And it's like, okay, I mean, sometimes we can afford to pay taxes, and so maybe we want to do the $20,000 of gains, and sometimes we would rather not pay, but maybe we don't want to have $50,000 worth of losses that we're going to roll forward $3,000 at a time, and it takes forever to use. So in that case, you might choose the middle one. Maybe you want to have a loss, but you don't want to have a huge loss. So the nice thing about the United States and crypto tax softwares, if you can find the right one, is you can pick and choose a little bit. In particular, the crypto tax software that we use actually gives you the option of choosing one method for 1 year and then choosing another method for another year. They do actually also have a specific identification setting, and I haven't had time to play with it, but I think you can also specifically say, okay, I bought that Bitcoin here, and this is the one I'm using for my cost basis, and I'm getting rid of it. And the nice thing is, it does have a way, as I mentioned, that you can choose different methods, which I think is really great because then, when the year is bad, like the crypto market is doing terrible last year, and you want to use first in, first out and kind of cash out those lower cost bases and use those up so that you can have the higher cost bases as an advantage later when you're realizing your gains. And then maybe another year, it's more advantageous for you to use highest in, first out. And this software actually lets you do that. So that's highest in, first out, last in, first out. These are the options for the American investors. But if you live in Canada, you don't get a choice. You get to use the adjusted cost basis method. And that is just fascinating to me because what the adjusted cost basis method does is kind of like what they do for mutual funds in America. I think they do this, where they will take all of your purchases over time and average them together, and that's the cost basis they use. So if you bought 1,000, 10,000, 4,000, so that's 3 purchases of Bitcoin for 15,000 total, and then divided by 3, your cost basis would be $5,000 for each of those Bitcoin. And that is great and wonderful when you are just starting out in crypto, when you haven't done a lot of trading, but we have clients who ran thousands and thousands of bot trades, and they live in Canada, so they have to use adjusted cost basis. And it is a little bit crazy because the tax software runs for hours, it seems like, trying to figure out, because if you've got bots running, it's buying multiple times a minute often. It's buying Bitcoin, 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 sell, buy, sell, buy, sell, buy. And every sell, you have to figure out all the previous trades, average them together, figure out the cost basis, figure out which part of the cost basis was used up, take that out of the running, and then you have the next buys, and then you have the next sell, and you got to figure it all out again. So I'm always really impressed when we do these Canadian accounts because it takes so long to run the report, and then it's just pages and pages. You can't summarize the transactions like you can in the United States. That's another setting we like to use with the tax reports, is to summarize everything so that you don't have like 1,001 transactions on your crypto tax report. Instead, what we do is summarize it down into like all of your short terms of one coin and then all of your long terms of that coin. So you get a much, much smaller and more manageable tax report. And depending who you go to for your tax preparer, some tax preparers are like, yes, that's what you should do. The government doesn't want to have a tax report this thick because you had 1,000 transactions and you have 40 transactions that fit on a page, I think. And so then, 1,000 divided by 40, how big of a stack is that tax report? But then other tax preparers are like, oh no, you have to report every single transaction. Yeah, I prefer the ones who are a little bit more loosey-goosey. I think they are on the right path. I think the less information, the better. I could go off on a tangent on homeschooling, but it's kind of like that. You just you give them enough information. You don't give them more information than they ask for, because then they start expecting more information than they ask for, and that can make it harder for you in the future and for other people who are trying to be honest, upright citizens or whatever. Anyways, that's just my opinion. So in the United States, we've got first in, first out, highest in, first out, last in, first out. In Canada, we've got the adjusted cost basis. In England, they have the HMRC, His Royal Majesty's. And I was really impressed because when the Queen died, it was Her Royal Majesty's, whatever, I forget what the last word is, Her Royal Majesty's tax system. And then the King died. And within a week, I honestly checked the software and they had already updated it and was like, His Royal Majesty's, whatever it is. I was like, okay, that is so cool. They're keeping up to date on things, which is great. So they have their own method over there. So whenever you're looking for a tax software, as I mentioned the other day when I was talking about how to choose a tax software, you definitely want to make sure that they cover and use and allow the use of the tax method that you want to use, particularly if you want to have a little bit of leeway in which method you choose if you're an American investor or one of the other countries that can use the 3 varieties. So I think Australia and New Zealand seem to be able to choose their own tax method if they want to. Really look at the ramifications of it because, like I said, first in, first out usually gives you the biggest tax bill, and then last in, first out or highest in, first out will usually, depending how the market is going, usually be the way to go to reduce your tax bill or reduce your gains. Could create large losses. Weighing it all, making sure that you have a plan and all that sort of thing. I love talking about this stuff. Obviously, I geek out about it. So if you're looking for somebody to kind of shoot the breeze about what your current investing situation is and what might work for your situation best, shoot us a message or come to one of our Facebook Lives, ask us a question. We are here Tuesdays and Thursdays at 4 p.m. Eastern talking about crypto taxes and all of the different things that go into it. We love answering questions, so message us anytime. We do have a link to our current course, which helps you figure out, number one, if you are in a situation where you need to report taxes, because just because you have bought crypto doesn't mean you need to report. Or perhaps you bought crypto and sold crypto in a previous year, but you didn't actually have any sales this year and you didn't actually receive any crypto this year. So in that case, you would not need to report crypto transactions on your taxes for US citizens again. But if you have received any crypto and if you have sold any crypto this year, you do need to report. And then we also take you in that course just really quickly through how complicated it gets so that you can figure out, if I get the tax offer, can I do this on my own? Or if I need more help because my situation is very complicated and there's a lot of errors in my account, and it would just be so much easier to hand it over to somebody and say, yes, tell me what to tell my accountant, and boom, we're done. I think I talked about Tuesdays and Thursdays, but we are also here on Saturdays talking about strategies at 10 a.m. Eastern and some of the things we're looking at. I'm trying some new things this week, which is fun, and trying to find enough time to do a little bit of trading and keep learning. You know, sometimes people say, oh, you need to go to a financial advisor. And sometimes you go to that financial advisor and they're like, oh, you should buy this, whatever. But they don't actually buy it. Like, what can they know if they don't actually buy it? Like, how much do they know? And the other thing is, like, you know, so many financial advisors, like the kind, like, you know, I don't want to name names, but like some of these brokerage companies that they're like, oh, come meet with us or whatever. And then they try to sell you some insurance product, or they're very big on mutual funds because those actually have commissions and things that pay them more if you buy them. So you got to watch out for that. But so many of them are just terrified of stocks. And I haven't asked them if they're terrified of crypto, but I'm pretty sure they're terrified of crypto too, because they probably have seen enough people like kind of get burned by a bad situation. They're afraid of it. They don't do it. They don't know it. They don't understand it. And then they're advising you on your finances. And it's like, So whenever I go in to talk to financial advisors and they hear like the size of my portfolio or what things I like to trade or whatever, they're just like, their mouth is kind of open and they're like, wow, do you think that's a safe thing? I say, I don't know. But I love learning. I love exploring and trying new strategies, new coins, new projects. It's all pretty exciting and keeps life more interesting. And I definitely do it with discretionary income. So we definitely have a good portion of our funds in safe places. Is the bank the safe place if they're threatening financial collapse and all this sort of thing? But anyways, we do have, you know, funds in the bank so we can pay our mortgage and all that sort of thing. Yeah, it's lots of fun. So if you would like to talk to me about investing in crypto or stocks or options, I love talking stocks and options and different strategies I've used and my favorite ones and all that sort of thing. Yeah, drop us a line, come by and chat, do something. Get out there and learn stuff. It's like an amazing world out there and there's so much to learn, and I love learning. I love sharing my learning with other people. It's really fun. And that's probably enough chatter for me for today, as I like to say at the end of these. So thanks for letting me be crooked in the screen. And we will see you again another time. Say hi sometime. And until then, have a great week.